Hi there, good morning. Happy New Year to you. And here's wishing you a really, really prosperous and productive new year. We start off the new year really just giving a recap of, the market and, just getting a sense of how things have really kicked off and, what our expectations are really going into the rest of the week and certainly what we think is likely to happen next week. Markets were closed on the first day of the year. US markets opened yesterday. Started on a negative note, really, as people basically looked to take money off of the table just on the back of the really strong performance that we saw in 2023. For context, the S&P was up over 24%. The Dow gained about 13.7%, while the Nasdaq added 43%. Really, the market really ended the year on a very, very strong note, notching 9 straight weeks of gains, to end the year. That's the longest winning streak that we've seen since 2004. So the market really ended the year very, very positively, just on the back of the fact that, the Fed had guided to, rate cuts next year. Inflation had also cooled. So all of these basically provided significant support to, the market last year. So, but coming into this year, the first trading day of the year, the market was negative. The S&P lost about 0.5%. The Nasdaq was down about 1.6%. However, the Dow was basically flat. It gained about 0.07%. So again, going into the rest of the week, we expect the minutes of the Federal Reserve meeting from December. We expect the minutes to come up today. Although the Fed had guided to 3 rate cuts, I think we'll be looking at those minutes to get a sense of how the debate went and if there are anything else that might guide markets in terms of how the Fed is thinking about those rate cuts this year in particular. Oil prices basically climbed about $2 just on renewed skirmishes in the Red Sea. Last week, the U.S. sank about 3 Houthi boats that had been attacking ships in the Red Sea. Also, just on Monday, Iran sent a warship into the Red Sea, essentially sort of escalating tensions there, if you will. And that's really, just created a situation where oil prices have really sort of gained over the last couple of days. Nothing significant, but again, we continue to monitor the situation there as there are potentials for things to maybe get heated there. On the local front, we saw in the news that an additional 7.3 trillion of ways and means was appropriated late last year. Again, this has continued as a way for the government to essentially fund the gap in its budget. There have been all kinds of takes on that and how that's really not the best way to go. It really remains to be seen how that continues. Also, the budget for 2024 was passed late last year, 28.7 trillion. Again, we look out for that deficit and how it will be funded going into 2024. Also, the last auction, Treasury bill auction for last year, we saw the stock rates, particularly on the 1-year paper, drop to about 12.25%. That's a far cry from the 16.75% that we saw just under a month ago. So again, it just tells you how drastically those rates have really come down. We expect the rest of the week to be somewhat light as the festivities fade off. Going into next week, we think that market should resume full steam ahead. Investors will basically be on the lookout for how things are going to pan out, look out for the sort of risks that are on the horizon, and basically take things from there. Be sure that this year we would certainly be available to keep you abreast with issues that are going on in markets on a weekly basis, just to basically guide and help you navigate the stormy waters that we're likely to see coming into this year. Thank you very much, and we hope that you do enjoy the rest of your week and a very, very happy new year to you. Thank you.